Hello, good day, ICT traders. This is Divine FX Capital, and today I'm going to be teaching you guys on a very vital topic in the SMC, in the smart money concept, our smart money concept. And also, as an ICT trader, you need to know about this. You need to know about this topic because it is very vital in the market. We use this entry strategy to take trade, and it works 90%. So today I'm going to be teaching you guys on reclaimed order block, a reclaimed order block. So without wasting much of your time, please, if you are watching this video now, kindly subscribe to my YouTube channel. Please subscribe to my YouTube channel so that we can grow together and make this study a very great study to everybody in this industry. So today I'm going to be teaching you guys on reclaimed order block. You guys know what order block is. An order block is simply an area of proportion whereby the big boys are placing their order. They are placing their order and they are going to come back in the nearest future, tap into it and displace to the opposite direction. An order block is also the last candlestick that was formed before a break of structure, being it a bullish structure or a bearish structure. The last buy candle or the last sell candlestick that was traded away from price coming back into it in the future, then react from that particular key level. So today's topic is a reclaimed order block. And what is a reclaimed order block? A reclaimed order block is simply an order block that was violated and will be used as a support or resistant level by price in the future. Do you understand what I say, guys? I said that a reclaimed order block is simply an order block that was violated and will be used as a support or resistant level by price in the future. So without wasting much of your time, with example, let us say there is a key level. Let us say that this is a key level. Liquidity is resting below here. Let us say that this is a key level and this key level is a liquidity area where price is coming to. And from this, let us say we have a structure, a bearish structure, price coming down, forming a higher, lower high and a lower low, lower high and a lower low, another lower high and a lower low, lower high and a lower low, lower high and a lower low and a lower high. So from this structure, price was targeting a liquidity area that is resting below, maybe an old low or relative equal lows. And from this diagram, price traded into that old low after clearing the sell side liquidity. What happened? Price is going to shift structure immediately. Price is going to shift structure immediately and retest into the reclaimed order block before buying. So this was supposed to be an order block. This was supposed to be an order block that was going to hold price from this diagram. This was supposed to be an order block that was going to hold price. But what happened? That order block was violated. As you can see, we have an order block. We have break of structure here. Price was breaking structure, trading into an order block, continue, price break structure, trade into the order block. We have this order block here. Price must come back and trade into the order block. So when the price is going, price is definitely going to come back and trade into the order block before moving to the opposite direction. But what happened? In a scenario whereby price traded into a liquidity area, after grabbing that liquidity, maybe an old low or relative equal lows, price is going to shift structure. This is a shift of market structure here. This is a shift of market structure from this diagram. And this was supposed to be an order block that was supposed to hold price to trade bearish. This order block was supposed to hold price here and trade bearish. But what happened? Price violated that order block, and what happened? Came back and retest into that order block. So remember, I said that an order block, a reclaimed order block, is an order block that was violated. So this order block here was violated. Is no longer an order block. Rather, it is a reclaimed order block. Price is going to come back and tap into that order block one more time before going back to the opposite direction. And this is another scenario here. This is another scenario. This is an order block that was supposed to hold price here. Another scenario is this order block. What will happen? Price is going to push up. Price is going to push up, and what happen? Price is going to retest into that order block. Price is going to retest into the order block, making it a reclaimed order block. Look at it. Price is going to come back and retest into that order block, and when it violates it and come back into the order block, it is called a reclaimed order block. Then before price will target another opposite liquidity. So retail traders, those people trading support and resistance. If you're a support and resistance trader, you they call it the support and resistance. If you are trading support and resistance, a reclaimed order block is going to be if it is a bullish scenario, a reclaimed order block is going to be a support zone for trend line traders. Look at, this was an order block that was violated. Price is going to use it as a support level to push price up, and this one also is going to push price up. This is called a support level or a demand level for price to push up if it is trend line trader. But this is ICT. I am an ICT trader, and from our mentor Michael J. Hodison, the founder of ICT, I learned this from him, and it is a very very good entry model to take trade when price come back into the internal range liquidity, which is this reclaimed order block, an order block that was violated. This is an entry setup for you, and also this is an entry setup for you. Even if you are a trend line trader, you take your trade here and here. And for ICT trader, we take our trade when price comes back into that reclaimed order block, the order block that was violated, and we buy. This is a buy. This is our buy target. We buy our stop loss below the low, and we target the opposite liquidity. This is how to take trade using a reclaimed order block. Without wasting much of your time, let's dive into the chart as I give you more example to buttress my teaching. So from this diagram, let me look for an example. Okay, from this diagram you can see that price was in a downtrend, and you can see that price was in a downtrend, giving us a higher high and a higher low, higher high and a higher low, higher highs and higher lows, higher highs and higher lows. And immediately price changed direction. What happened? Price came back and retest into this reclaim. This is a reclaimed order block, guys. This is another example. This is an order block that was violated. This was supposed to be an order block that was going to hold price, but what happened? Price came back in the future and tap into it. You can see how price reacted from that key level. This was supposed to be an order block that will hold price, but what happened? The moment price broke above it, it was violated. It is no more an order block, rather it is called a reclaimed order block. And you can see how price tapped into it. You can see how price tapped into it, and boom, price moved to the opposite direction, which is this high here, And if we were to take trade using the reclaimed order block on gold, this is supposed to be our entry, and price retested that reclaimed order block, our stop loss below here, while we target the relative equal highs or the old highs. This is an example. Let's look for another example. And remember, as I told you guys, the second example I gave you people, this was an order block. This was supposed to be an order block, the second order block that was supposed to that price was supposed to react from that zone. But what happened? Price came back into that reclaimed order block for the second time. You can see how price reacted from the reclaimed order block for the second time, tapped into it, and this is supposed to be another entry for us. Enter here, your stop loss below here. Your stop loss should be below here, and you target the opposite liquidity. This is a two setup entry model that was framed on gold on the topic of reclaimed order block. So this is how to take a trade using a reclaimed order block. It is simply an order block that was violated, such as we have a fair value gap that was violated. It's called an inversion fair value gap. In my next video, I'm going to be teaching you guys on an inversion fair value gap. An inversion fair value gap is the opposite of an order, is simply an example of a reclaimed order block. It is just a fair value gap that was violated and price comes back into it, using it as a support or a resistant level to trade to the opposite direction. So let's look for another example on a reclaimed order block. Let's look for another example. Okay, you can see this is another example on a topic of a reclaimed order block. You can see that price is targeting a liquidity area. This is a liquidity area. Liquidity is resting below here. Draw on liquidity. Liquidity is resting below here, and we have a downtrend, price creating higher high and a higher low. Lower highs and a lower low. Lower high. Sorry, guys. Price was creating a lower high and a lower low, lower high and a lower low, lower high and a lower low, lower high. So price failed to break below this low, and what happened after it took out liquidity, sell side liquidity, it shifted structure immediately. You can see how price came and ranged for a little bit. What happened? Price shifted structure and retest into this order block. There is an order block here. You can see how price traded into this order block. This was an order block that was violated. This was supposed to be an order block that was supposed to hold price, and price came back and tapped into it in nearest future. This is a reclaimed order block, and this is how to use a reclaimed order block as an ICT trader to take good and precise entry. To take a very good and precise entry, and institutions uses this entry model, they are going to come back and repair their entry model. You can see that this was an order block that was supposed to hold price, but it came back the first time, came back the second time, and was violated. Trendline traders called it support or resistant level, and you can see how price traded back into that reclaimed order block here. This is the reclaimed order block. This was the reclaimed order block, and price came back to repair into that key level. And when price traded into that key level, you can see how price reacted. Price reacted from that key level very, very precise. It is going to give you a very, very precise entry on this model. This entry model works mostly on gold. You can see how price targeted the next liquidity level, which was here, and also delivered to TP. And this entry is a 90%. It gives us a 90% win rate, and you can see how price tapped into it, and what happened, it displaced into it and give us a massive entry. This is precisely how many pips on gold. This is this price delivered this was 5,000 pips delivery on gold, which is a very, very good and precise entry. So let's look for another example of a reclaimed order block. Another example of a reclaimed order block, guys. Another example. Okay, guys, this is another example on a reclaimed order block. You can see how price was pushing to the downside, giving us a high, lower high and a lower low, lower highs and lower low, lower highs and lower low. And this was the last order block that was violated. You can see how price, because this is a break of structure to the downside, another break of structure to the downside, and you can see how price violated this order block. This was another block that was supposed to hold price, and what happened? Price violated that order block, and it now serves as a reclaimed order block. You can see how price came back and tapped into it one more time after the break above. Price came back into it to repair or to recreate another entry position for a long, and what happened? Price distributed to the downside. This is how to use a reclaimed order block. And if you are to enter this trade, you enter from that reclaimed order block, your stop loss below the low, just a little bit, 10 pips or 15 pips below, and you target the opposite liquidity. You target the opposite liquidity. You can see how price targeted this opposite liquidity. We have a relative equal high resting above here, a buy side liquidity, and you can see how price traded into that key level. So guys, this is how to use a reclaimed order block to take a good and precise entry. Just go to your chart as an ICT trader, or go to your chart and backtest these things, and this particular strategy works perfectly on gold. So if you're a gold trader, you will understand what I'm trying to say, how price comes back into a reclaimed order block when it is violated and it moves massively. So please, without wasting much of your time, I know that I'm already doing well in this industry, and my effort is to make you guys learn how to trade SMC, ICT trader, is to learn how to trade SMC, smart money concept, in the right way and take good and precise entry. So without wasting much of your time, please, if you are watching this video, kindly like and subscribe to my YouTube channel. Please subscribe to my YouTube channel and turn on the notification button so that whenever I do another video on an important topic, you get notified. You get notified. Sorry, please. Guys, with this opportunity, I know that I've changed some people's narrative on how to trade and how they look at the price action. Without wasting more of your time, thank you for watching this video, and kindly like, subscribe and follow me for more content. Thank you, guys.